come on in, say hello. I think we're a couple of seconds ahead of the hour, but that's not too much of a problem for any of us. So we're going today to talk about your price lists for success. And last week we went through a lot of the base metrics for your actually business numbers, because the whole process here is, how do you know if you've created a price list for success if you haven't aligned that with the business goals and the sales mix? So this whole calculator, which many photographers have said is absolutely priceless, is designed to connect the business goals with your prices for success and make sure they align based on your sales mix. And your sales mix is simply, if you take your offerings, how many you expect to sell, and then when you sell those, will they translate to deliver your business metrics? It's really as simple as that. It sounds more complex than it is, but by knowing these numbers and having them ingrained in your head and your goals and your desires, you've a much greater chance of delivering on those numbers. So let me just share my screen and let's get started. And what we'll do, first of all, we'll just go back on what we did last week, just briefly. I'm not going to deep dive into this because we've done this in last week's webinar. And you will be the last webinar we did last Thursday. So you'll be able to see the replay if you need to. Okay, so hopefully you guys are all seeing my screen now. So where we started with the business metrics was we asked a question just about, what are your financial goals? What are your financial goals that you want to get from your owner's pay? What's owner's pay? It's what the business pays you as the owner, net of tax. So it's net of tax, so what income? And we just asked you to fill that figure in here. And this can be anything from 1,000 if you're just starting out and it's a part-time process right now while you figure out how to go full-time professional. Or you might have 20 studios in every town, in every city, and this is 1,000,000. It doesn't matter what the figure is, just put in the number. And then we asked you then the number of sales you expect to do, the number of bookings, what cost of goods multiplier you're working on, and then we worked out what your conversion is from lead all the way through to conversation, which might be a pre-shoot consultation, all the way through to somebody in front of camera as a booking, and then the sale. But we work backwards. We started with the number of sales you needed, which was 100. Then we figured out how many leads you needed to generate. And we worked all the way back based on profit first best principles. So again, I'm not going to deep dive into these, but it basically works in the calculator. So when we share this calculator with you, all you need to do is fill in these key numbers here, these 6 numbers into the purple, and it does all the other calculations out for you based on profit first best principles. So for a business of this size, for someone who wants to earn 50,000, they will need a turnover of 133,000. They will have 5,000 in their profit account, 15,000 will cover their tax bill, 30,000 is what they need to run their business on. So this is all based on profit first principles, and it starts to build out some other key performance indicators for us. I had to put on my eyes there for a second. So it works out like what your expected current average order value needs to be based on these numbers. So where did that number come from? Well, it just took the number of sales you want and it calculated the total revenue you need and divided that with the number of sales you need. So you have to have 100 sales at this average to deliver these numbers, to have any chance of delivering on those numbers. So how does that then translate to your price list? And that's what we're going to deep dive into now. So we also figured out for you what your targets have to be based on your sales conversion ratio. We start with your sales, we work back to the number of bookings and shoots you need, we work back to the client conversations, we do consultations you need, and we calculate the number of marketing needs you need to deliver this. So these are all based on your numbers, your assumptions, your data that you've built up over time that you know are your conversion metrics. So then this summary page, and anything that's in that isn't purple with white, you won't be able to put any figures in there. So the calculator is doing all these calculations automatically for you. So it's just breaking then your marketing targets from a yearly target into a quarterly target, a monthly target, and a weekly target. That's all that's going on there. So the next step then is working out your marketing budget. And we did this last week as well. So we just worked out, and all the logic behind these numbers are explained in that. So what percentage of your revenue are you giving to your marketing budget? What percentage of your bookings are going to come from past clients that you already own the data, whether they were a lead or a client, what your fixed marketing budget is, what your product credit is, and we'll deep dive into that today now as to what that means. And then the final piece then is what surprise and delight are you going to build in. And then it worked out then in total for you, your total targets on a yearly, on a quarterly, on a monthly, and on a weekly basis. So now you've got an action plan. You know what you have to deliver. And we covered all that again last week, and we got to this page. And this page then was a summary. So it's a summary of your key performance, your business key performance indicators, which is your target average sales value, your target average real revenue. What's real revenue? It's basically your sales less your cost of goods. Then your target average order value, and then your target average cost of goods. So it's just calculating those. So they're key indicators that you can have in your business plan then that you can keep a metric of. The marketing then, it was calculated now for you, what's based on your marketing budget, what's the max amount you can pay per new booking? What's the max you can pay for a lead based on your conversion metrics? And then the marketing promotional credit was the figure you put in to say, this is what I'm going to do. This is what I'm going to offer as my promotion credit somehow in my marketing to attract people into my business. And this figure can be anything, and we put that in a bit earlier. And then this is where you can change the surprise and delight number. So I'm going to change this to 120. And surprise and delight is the principle that you're really good clients, right? We all love a free gift as a thank you, don't we? And the idea here is surprise and delight is that as a cost that's coming out of your business. So what we want to do is account for that in our price list, so we can attach it then to any of the packages that we build going forward. And then these then are your weekly sales and marketing activities. So this photographer, to deliver their numbers, knows I have to generate 11 new leads every single week. I have to. Because if I miss 1 week on it, the next week I have to get 22. If I don't do it for 3 weeks, I have to get 33. If I don't do it for 4 weeks, I have to get 44. And then it just becomes impossible to deliver, right? So that's the principle there. The next piece then is the number of conversations or pre-shoot consultations. So this photographer needs to have 4 every single week. So again, that's a simple metric to measure. Did I have 4 this week? If I didn't, I'm not going to deliver my numbers. How many bookings did I generate? Did I generate 3 bookings this week? If I didn't, I'm going to be quieter in the weeks ahead. So a lot of really good photographers that we see, they're working out 6 to 8 weeks in advance from when they're generating a lead to they're actually booking them in the calendar or the diary to come in for the shoot. Yeah. So by tracking this each week, if you don't achieve this every week, there's going to be gaps in your calendar out further. And the final piece then is the number of sales you need. So based on this photographer, the numbers they need to. So here's the new piece, and we went through all that piece earlier in the process. So let me just explain some of the logic here. So ignore these particular prices I have here. I've just made these up, right? But what I want you to do is I want you to list out all the products you're thinking of offering for sale, no matter what they are. Then I just want you to give them a product description, who the supplier is. So if it's a 60 by 30 framed, whatever, or call it what it is, who's the lab or where do you buy it from? What's the total cost including delivery? So a lot of people forget to factor in the delivery cost of getting the product from the lab. Yeah. And some people actually put in a bit of time there. So I know PPA suggests that in your cost of goods, you put in some time that you have to put in to get those goods. So if you're handing it, ordering it, receiving it, per order might take an hour, right? So what's your hourly rate and add that to it. So if you're doing that, just put that in here. And all we want to do at this stage is list them all out. Now, here's a key number for you. I'm a great believer in collections. And I'm a great believer in that your consumer, your client, seeing value in their collections. And the best way to show value in collections is that those same items are available a la carte, but at a more expensive price. But here's what a lot of people do by mistake, is they calculate their pricing, right, as their a la carte, and then they discount the a la carte pricing in their collections. So therefore, if you're doing base numbers, if you sell loads and loads of collections, you're never going to make your numbers. You have to sell more collections to make the numbers by what that discount is. So if I did my a la carte pricing and that was based on my business metric numbers, and then I went, right, I'm going to discount my a la carte by 20% for my collections, then I have to get, for every 5 sales, I need one extra just to make the same money. So we don't want that to happen, right? We want to be able to align our business metrics with our pricing metrics. And that's how we price for success. So the first step in that is to one, list them all out, and then put in a percentage here that you're going to mark up your collection prices by, in the individual collection price, to your a la carte to show the value difference. Do you see the slight flip in process there? So rather than calculating my a la carte prices based on my business metrics, I'm calculating my collection prices and then adding on to them for my a la carte pricing. And the calculator does it here automatically for you. So what it does is it has a look at whatever number you put here, and based on your cost of goods multiplier, it puts the number in here. And you might say, well, okay, Ronan, my cost of goods is 200, my cost of goods multiplier is 4. Why is it putting 900 in here? Great question. So the reason why it's putting 900 in here is, do you remember we talked about our surprise and delight item? So it's basically adding that cost to it for your surprise and delight. That's what it's doing. It's adding the cost of the prize and delight at cost. So that's a really important thing to do here. And then what it's doing is it's taking this price and it's calculating what, with 20% markup, what is the suggested a la carte pricing going to be. Yeah. That's also calculating my margin figures. So don't get too hung up in this just yet. Just list all your products out. And the next step then is to build your collection packages. So let me just explain some of the psychology behind this, and then we'll deep dive into what the calculator is actually doing here. So when you do collections or packages, a lot of people only do 3 packages if they have 3 packages, right? So in this case, you might have a good, better, best, right? If you only have a good, better, best set of packages, 70% are going to buy your better package, because 70% of people buy in the middle, no matter what they're buying. 70% buy in the middle because they don't want to go for the most expensive because they feel guilty. They don't want to go for the cheapest because a lot of cases they feel cheap. So 70% end up in the middle. That's a fact. So you'll probably find that 70 are here, 10 are here, and 20 are here if you've ever done this. So the strategy here of price anchoring is that what we wanted our top package to be, that we put a package above it at a much higher price that we never intend ever selling. So the function of the price anchoring package is not to sell anything. The function of this package is to sell more of the best packages. And what happens then is, rather than 70% going for your better package, the 70% gets split between your best and your better package. Do you see the difference there? So there's a little bit of psychology going on in there. So what we do then is we just build out our packages. How do we do that? When you've got this calculator, you just copy and paste what's in purple, effectively, copy it, and build it into the collections. And the only important thing to remember here is that the first item in your collection, make sure it's in this top row. And then the other ones then go in the second, third row. Why is that? Because if you're doing a product credit as an offering per sale, or if you're doing that, you only want that to be counted once here. Yeah. So if you look at the formula here, I'm stripping out the cost of that for the subsequent items within a package. Okay. So all you need to do is build out your package, calculate the pricing, and here it will show you what the total cost is. It will show you a viewing day price, and then you set the normal price. Okay, so what's this? Okay, so this is something I don't see a lot in America, but I see a lot of it in the UK, or a certain amount of it in the UK. And it was designed by some photographers many years ago to give an incentive to somebody when they're in your viewing sales room that they buy then. So it's more expensive later. And there's some logic to that, right? There's some logic to that because you do have extra costs if they come back again. And then if somebody's flipping and you hear, oh, I need to check with my husband but it's an encouragement for them to buy now. I'm not a great lover of it. I think it's a bit hard sell for me, but I have it in the calculator because there are clients of ours who do that. So I had to build a calculator that does account for it. But here's the important bit. See the purple? These are the bits you get to change. So these are indicators. They're price alert indicators that you don't want to price the package at any less than this, or the collection, or any less than this, or any less than this, or any less than this. So some of your considerations in here, when we go through this number, is that you might use a technique called simple pricing, which is there's no commas, there's no nothing in your prices, so it's 1899. There's no dollar sign, there's no pound sign, euro sign, there's not a comma after the one, there's not a 0.00. Really important in pricing. You may then, depending on your business, you may use 1899 because people see that a lot cheaper than if it's 1900. However, there's some businesses who like to just keep it even numbers because they feel it sits better with their brand. But whichever way it is, you full control of this number. So you can set this to wherever you want. Yeah, you're in control of anything that's in purple. You can change to be whatever you want. You can't change these because these are calculations the calculator is doing as an indicator. That's what they are. They're an indicator. Okay. So see, that's a bit less than that. So maybe I should increase that a bit. So because I never really want to be below that price, right? Unless I'm doing it for a reason. So if it was, if it was a number here, so say this was 1705, I might want to go 1699 on it. That's the only reason that you would ever be below it. But we try and not fall below this, but we try and be above it as much as we can. So that's the principle here. Here's another bit of psychology that a lot of people do when they're doing these packages, right? They might show a lot more value here, but this price will be closer to this. Why is that? Because when people see this price closer to that, often they will make the jump to that. So if this is the one you really want to sell, then just bring the middle package. There doesn't have to be an even amount between this price, this price, this price. Some people do that. They think it has to be an even jump because that's the way our brains are programmed. So if this is 1500 and this is 2000, well, then this has to be 1750, right? It doesn't. So you might find that if you make this 1850, that more people buy this because they see greater value for just an extra 150. Does that make sense? And the numbers here the actual numbers don't matter, guys. What matters here is just the principles. But we've built this calculator out. So you start to go back, you list all your products, and you copy and paste and build your collections. It will suggest the minimum price, and then you set what you want to charge for them. Yeah. And if you aren't doing this viewing the price thing, just pick one number here. You can just put one number there. That's the number that'll come through. Okay. So then we have our a la carte pricing, because we talked about that the principle that we want to do is, even if we have our collection prices, we want to show some a la carte items to show the value in the collection. So it's better. There's more value for the client by spending more by buying the collections. Does that make sense? So that's what we're trying to do here. So again, we just copy and paste the items in, just group all your stuff together, wall art together, your folio boxes together if you're offering folio boxes, or if they're albums, doesn't matter what they are. If you're going to offer digital packages, you can offer them here. Folio art frames, whatever that might be. So the folio art frame that I have here, do you remember that surprise and delight that I wanted to put into my higher collections? So here it's costing me 120. It's on my price list at 799. I never expect to sell it, right? But here's where I'm using it. When somebody buys my top 2 packages, actually I'm going to change that to 0. When somebody buys my top 2 packages, I'm putting that surprise and delight cost in for me because it's a cost for me, but this is something I'm going to gift them. So when I gift them to the people who are my better clients by my bigger packages, they're amazed because they've got something of value for free. It's cost you 120, right? But the client attracts a value because they see it on your price list at $7.99. You see that? But you're taking account of it, but you're rewarding your better clients with a surprise and delight item. And guess what? when they come and collect their work, or if you go to their home and you install the wall art and deliver the album, the 40 box with it, when they actually get this gift, they won't be able to stop talking about you. It also does away with the buyer's remorse. And because these are your better clients, they're not going to recommend you as a business to more people like them who they like because they're their friends. And people have friends with people who are very like them. So then the referral opportunity there for you then just is ginormous. It just increases that happiness in your ideal clients, your top clients, so that they recommend other people, that they're absolutely delighted to you, or at the very least come back to you again. Yeah, that you're the brand for them because you've surprised and delighted them. Okay. So that's the principle there. So the a la carte, the other thing, important thing here in your pricing when you're building your prices, and this is just in an Excel format. This is not a pretty price list, right? But the other important thing is you always list your most expensive items first to last. Why do we do that? The reason why we do that is that it's been proven. They've done a whole lot of tests around a whole lot of things in this in marketing. And one of the tests they did once was they put a breakfast buffet out. So they went with the bacon, the sausages, the hash browns, the tomatoes, the mushrooms, the eggs, the beans. And then on this side, they reversed it. They started with the beans, the exact opposite with the sausages at the very end, right? And they started two queues. Guess what happened? People fill their plate with the first three items, regardless of what that item is. And why is that? Because we tend to, even when we're reading a price list, if it goes from the smallest price to the largest, we might go two or three and say, that's okay for me. But if you've got 8 things in a price list, they'll do the same with your price list. They'll start with the highest price and they might stop earlier. So just those simple things can really make a difference. The other important thing is, your client doesn't care one if it's wall art. See the way I've got canvas wrap flush here and I just have wall art here? The reason for that is that a lot of people have, so they have a 30 by 40 inch canvas wrap, they'll have a 30 by 40 inch acrylic, they'll have a 30 by 40 inch um, wooden, they'll have a 30 by 40 inch on a particular frame. It doesn't matter what it is. And all those will be at different prices. That's just decision fatigue for your client. Now they have to not just think about what size do I want, but they have to think that these are all different prices. And should I go for that one that I like, but that's a little bit more expensive than that one? Take all that away. They don't know their different cost prices. So when you're here, you should try and all of your wall art, if you can, have it as close to the same price as you can. Now, obviously, there's exceptions to that. So if you're doing painted canvases and you're also doing acrylics, right? A painted canvas where you're doing all that work afterwards has to be way more expensive than acrylic, right? But where there's not that much of a difference, have it all at the one price. Have it all at the one price. And start with the biggest size and just go 30-inch wall art. So it doesn't matter if it's a 30 by 20 or it's a 30 by 24. No, the difference in cost is little. Don't cause confusion. Just have it at all your 30-inch wall art is that price. Yeah. Okay, so when you've built your a la carte, then this is also calculating out for you and what your revenue is. And here's where the magic starts to come together. And we start to link the business numbers with your price list. So here's what you do. So again, it's only the purple that we fill in the quantities on, only the purple. Okay. So what you do here is you anticipate and guess how many of each item you're going to sell this year. So you already know from the very first numbers you put in that your target is to have 100 sales. So this number here that's automatically coming in for you from the previous data you put in, we need to make sure that when we fill in these numbers that we have 100 here as well. So here, this photographer has guessed, and these can be anything. So we don't expect to sell any price anchoring package, right? That's just to sell more of our best package. So we've gone with 20 best packages, 35 here, and 35 good packages. So out of our 100 sales, we're expecting 80 to go for collections. And then our other clients who don't go for a collection, then we anticipate what they're going to buy. So again, it's only the purple that you can put the figures in on, okay? And then you want to make sure that whatever you put in here, because if I have that only at say 4, right, then I'll be shy with the number of sales, right? So I need to fix that. So we need to make sure that those numbers align. Okay. So sorry, I've done something weird there. There we go, that number. Okay, so now it's right. Okay, so I've got 100 with 100 sales, right? Why is that showing 21? Okay, maybe there's a wee bug there in that. Okay, I'll fix that later, but don't worry about that. I will fix that. I don't know why that's not shown as 100. So when it adds up all these anyway, this 100 here should align with this 100 here. Now here's where the magic is. Do you see this? This is now saying that at these prices, with this sales mix, your total real revenue, which is your margin, which is your total sales less your cost of goods, is going to be 105,000. And your business target real revenue was 100,000. So now these are aligned, right? These are aligned in that you want this number to be greater than this, because there will always be a little slippage. What would happen if you had less sales? Yeah. So what would happen if you had only 20 of these, right? So you have less sales and you were targeted. It leaves room for error, right? So my price list, even though my mix is less than what I projected, so 95 less 100, my price list is constructed. There's a little bit of leeway that even if I only have 95 sales at this sales mix, I'll still deliver enough real revenue to deliver my business numbers. Let's just go back then and see where these numbers came from, right? So your price list numbers are just coming from your pricing, because we're indicating what it needs to be to deliver your business numbers. It's just coming then from the sales mix that you put in. So I'm going to reverse this back to where it was, right? Now, so where did this business number come from? So let's just go back and see, because this is how this all matches together. So we wanted income from our business of 50,000. We identified that we wanted 100 client sales a year. That's what we built our business on. And we're going to use a multiplier of 4 on cost of goods. So what the business number did was it said, right, so based on profit first principles, a business that runs itself to be the very best business, if the owner's pay is 50,000, the real revenue needs to be 100,000. Yeah, that real revenue number is exactly the same number as that. Yeah. So what it's calculating there then is it's saying that, right, so now I built my price list and I published on my price list as to what it's going to be. Yeah. And it's saying then once I sell this number of each of these prices, this price list is going to create real revenue for me of 106,000. So once this is more than this, I'm okay. But what if I had a disaster of a year? Let's say I did a disaster of a year. So I had 15 and 20. Yeah. Now you can see my price list that we've constructed at the prices I'm selling at with this sales mix. I have no chance of making my business numbers. No matter what I do, I just can't do it. So what can I do? I can either do one of two things. I can increase the quantity that I sell, or I can increase my prices and do less. They're the only things I can do to align these. And when you build yours, you'll probably find that. You'll probably find that there's a big gap here. So even if your price list is built and it's much greater, so your real revenue from prices is greater than this, well, that means then maybe you have some leeway if you need to reduce your price. If you need to. But more often than not, it'll be the other way around. You'll find that your business number does not align with your price list. So the prices you expect to sell at the sales mix that you're selling at, no matter what you do, you're not going to deliver your business goals. That's how this calculator works. So hopefully you guys see some value in this. The photographers that have seen it have said it's unbelievable as to how it'll help them. And it just gives a clear indication, because if you go back, what I have now is I started with my business numbers. So I'm going to do 100 sales. This is the average that I'm targeting. This is going to be my total revenue. This is going to be what I'm going to spend on my cost of goods. This is going to be my real revenue. I'm going to put 5,000 in my profit account. I'm going to pay myself 50,000 as the owner of the business. I'm going to put 15,000 into my tax account. And I know based on profit first best principles that if I put 15% of my real revenue away for a business of this size, I'll have enough money to pay my tax bill at the end of the year. And I'm going to run my business on 30,000. And this operation expense has to cover everything else: your rent, your rates, your light, your marketing budget. If you've got employees, it would be included in there. Everything else is in there, is in your operation expenses. So when I do analysis of most photography businesses, this is the number that's out of kilter. It's not quite 30%. So that's how all this fits together. But at least if I do this, now for those of you who are in PPA and have done the numbers, you'll see that their best practice is slightly different than this. So their best practice for a business like this is the owner's pay is actually 40%. So this would be 40,000. And the operational expenses is 40%, is 40,000. These figures are the target that I think businesses can get to, and I have helped photographers get to this level. And these figures are based on all businesses, not just photography businesses, but every business of this size. Now, here's a little health warning. These best practices percentages are based on businesses with a real revenue within a various category. So this category is within 0 to 250,000. If you have a bigger business and your real revenue is between 250 and 500, these best practice percentages change. So your profit for a business that's between 250 and 500 real revenue, not total turnover, now real revenue, your best practice is your profit should be 10%, your owner's pay is 35%, your tax is still 15%, and your OPEX is 40%, so it's a little bit more. If you have a business that's real revenue of 500 to $1 million, these percentages change. So if you are in any of the other categories other than category A, well, then reach out to me and I'll change the percentages and I will send you a price list that's relevant to your category. But the vast majority of photographers I come across are in here. They're in this category here of real revenue of 0 to 250,000, because a lot of photography businesses are single duopreneurs, right, or triopreneurs, and most of those are in here. There are the exceptions that go in here and in here, but they're exceptions rather than the rule. But if you are in there and you want this calculator, then I'm happy to change that for you and share that with you. Okay, so let me just stop the share for a second and see, are there any questions? Because there's been a lot of stuff there, and I'm sure a lot of it has been new information that people may not have seen before. So if you've got any questions, just put them in the chat. I should have said that before we came in. Has anyone any questions or comments on any of that, on what we've just done there? Has anyone any thoughts? Is this a whole load of, does it make sense, or is it useful? If it's useful, just put a Y in for yes. And what I'll do then is I'll be able to tell you where you'll be able to get a copy of this calculator. So Marnie said, good to see you, Marnie. Good to see you, Elise. Good to see you, Peter. Only the purpose stuff, Lisa. Yeah, that's all we're going to copy across, Lisa. So let me just check on Facebook too to see if there's any questions. If you have any questions, just ask them there. And I'll just check out Facebook because some people are joining us live on the Facebook group. So let me just see in Photography Think Tank, is there any questions in there? Robin is there. One comment. No, don't think so. There's background noise behind your man's voice conversation. Am I the one hearing that? Apologies for that. That I am sharing an office with somebody today. We thought we had our mics set up that I wouldn't pick up people, so I apologize for that. So there is a question, but it's gone in the Q&A. Let me just see what's in there. Doug says, this is really helpful. Where can I access this calculator and previous sessions? So Doug, the previous session on the pricing is in the units tab in Photography Think Tank. So I think you are a member of the Photography Think Tank group, the Facebook group. So it's in there in the units, and it's the first one, and this recording will be posted in there as well, along with the calculator for you guys. So hopefully that answers your question. It's always good to see another educator finding value in what you produce. So that's good to hear, Doug. Good info, Roland says Stuart, good. And Diana says good. Okay. So is there any particular questions? Do you want me to go over anything again? Do you want, for those of you who are joining us this week, do you want to just run, do you want me to run through Profit First again, just roughly how it works and why it does, seeing as we have a little bit more time, right? Let's do that. So if you want to leave, that's fine, right? Just, you don't have to stay. But I just run over Profit First and just the principles of Profit First again. So let me just share my screen while we have some time. And I'll just share the principles of Profit First again. So here's the principle of Profit First. So how Profit First works, I'm going to deep dive into this. If you're a BSA member in time, we're going to deep dive into implementing Profit First into your business. So Profit First, the genius behind it is a guy called Mike Michalowicz. And Mike Michalowicz, his mission and his vision is to eradicate entrepreneurial poverty. So what does he mean by that? So a lot of businesses he comes across people who take risk like you and I, and often we don't make the money we desire or deserve from our business. And he recognized very quickly that something that I fell foul of in a past life was that often we're built as entrepreneurs that we chase the revenue. And we think that if we make the sales happen, that eventually the profit will come. But just like Mike and just like me, it doesn't. It actually doesn't work that way. And why it doesn't work that way is your operational expenses just increase as you drive your sales forward, and this profit figure never comes. And why Mike calls it profit first is in a full profit first scenario, you take your profit first. And it makes perfect sense to do this because he builds the system on the basis of having multiple bank accounts. So when you receive, in this case, let's say I receive $1,000, euro or pounds, the figure doesn't matter. So 1,000, right? When I receive that money, I have multiple bank accounts. And when I receive that 1,000, I send 5% of it off to my profit account. And it's a separate bank account from my main account. I send 50% of it off to my owner's pay account. I send 15% to a separate taxation account, and I send 30% to my operational expenses account. So what that does is it's now everything's in a separate bank account. So I'm never tempted by my profit account to run my business with my operational expenses from. I always have the money in my owner's pay to pay me the salary that my work deserves and what I desire as the owner of the business. Quite often we're the ones who make the sacrifice. And that's how the system works. And this is best practice that we've put, that there's about 500 profit first professionals now around the world. And we've analyzed tens of thousands of businesses at this stage. And this is the best practice we see for a business of this size. Now, I've worked with photographers where this 30% has been 80%, right? And therefore they've been paying themselves nowhere near what they should be paying themselves as a business owner. So how do you do that? By flipping the mindset. I've helped photography businesses go from 80% to 30%. And it just changed the mindset. Rather than chasing the sale, hoping the profit will come, it changed the mindset to say, how can I reduce these operational expenses? How can I get them down? And they can be simple things. It can be simple things even down to marketing, you know. So I've had clients where they go to a trade show and they have a booth and they were bringing 2 employees on a Saturday and Sunday. So they were paying them for the Saturday and Sunday. They had to feed them, pay their travel expenses to get there. And then they decided to do it again without those resources and gathered exactly the same amount of leads. Yeah. So, but it just flips the mindset, because the mindset before that was, oh no, well, what if I don't bring them and there's somebody there who wants to be a client and I miss out because I'm talking to someone else? That's chasing the sale mindset as against being focused on, you know, what's the margin and what are the costs? That's what's really key here. So this calculator ties all those pieces together. That's what it does. Okay, there's a few more questions in there, so let's answer them. Let me stop the share. Let me just put on my glasses so I can see what the questions are. I'd love to see Profit First again. Okay, yeah, so we will deep dive into Profit First. If you are in the group, you will see in the units tab, I think there's some webinars we've done on Profit First again, so that will help. What suggestions do you have for operating expenses at 30% or less? Most of my photography clients are around 45%, so it negatively affects their owners' net pay. That's right, Doug, it does. So you will find, and I think I mentioned that when PPA did their research with 700 studios or whatever, they found that most businesses, best practice, this size, their operation expenses were 40%, and their owners' pay as a result was not 50% but 40%. So we really need to try to get that. Or quite often then that happens too is, you know, the cost of goods is just way too good, so the real revenue is not at the figure that it needs to be. So that's why I love to start with what do you want to earn from your business, and work that backwards then into what the business metrics are, and then translate that business metrics into your price list to make sure that at the sales mix that you're pricing stuff correctly to deliver your business metrics. So hopefully that makes sense. Yes, excited to, let me see where we stop. Stuart says great info. That's where we were. Yes, excited to take a look at this with my business. Great. Melissa, that's good. I really appreciate the clarification about how to price a la carte after packages. Thank you, Connie. Good. I hope that helps. Mari says, I really like this approach compared to what I've been using. They're similar, but the approach to this one is more helpful in figuring out targets that have stronger meaning. Thank you, Marnie. Glad you find value there. Elise says, I missed last week's part of the webinar. Did you say it's available in the Think Tank group? Yes, it's available in both our Facebook groups. It's available in the Think Tank, Photography Think Tank, and it's available in 3XM Insiders. So how you find it, let me show you where you find all those, because we're finished a little bit earlier today. So we might as well use the time productively. Let me just go, just give me 2 seconds now, and we'll call up Facebook, and I'll show you where it is. I go to 3XM Insiders. Because all of them are in here, but a lot of people don't realize that they're in here. So let me just, sorry, 3XM, just give me 2 seconds now. And I'll show you where they all are. 3XM Insiders. And there's the group. Okay, so I can share this now. So just give me 2 seconds. I just share the screen. I have too many screens open. Okay, so you should be able to see 3XM Insiders now. So we're in the Facebook group, 3XM Insiders. I have mine set to dark mode. Yours might be white here. They should look the same. So if you can't find it and you're not a member yet, just put 3XM Insiders into the search here and it'll find a group for you. Now, when you find a group, then you'll see here the Units tab. And in the Units tab is every single video and webinar that we've ever done. So all the Think Tank webinars are in here, and all the other webinars we've ever done. So when we go down here, there's business inspiration ones, there's marketing ones, great marketing ones in here. Creating your business plan. I'm trying to see where the pricing one is now. The last pricing one, where is it? There, the psychology of pricing. I think that's the one. So see 70 more. Yeah, no, it's one later than that. Where do we have it? Anyway, they're all in here. What I'll do is, let me just go to Photography Think Tank and just show you the other group, right? Because we stream everything live in here as well. So if it hasn't been put into either one, it's definitely in here. There it is. So actually go to Photography Think Tank, not 3XM Insiders. We mustn't have uploaded it yet to Insiders. So it's webinar 70, creating your prices to deliver your, that's the first step, the first webinar of this group. So look at that one first, which got deep dives into what we've discussed, and then link it to what this is today. And what I'm going to do in here, I'm going to publish, so you'll be able to find the file. When you come into, it'll be here tomorrow. When you go to more, and you go to files, it's going to be in here in files, the calculator for you. All right. So let's just see, is there any more questions before we call it a wrap? I understand for me, tax business, but with hash 5% per profit first, what is that actually going to? So Diana, your profit, your 5% goes to your profit account. And when we deep dive into profit first, what we teach is that at the end of each quarter, whatever's in your profit account, half of it goes to you as the business owner, and half of it goes to a profit reserve account, which is effectively your rainy day fund. And what you want to do over time is you want to have enough money in your profit reserve account that you never touch, it's vaulted away, that to run your business for a year, even if you've no income. What does that mean? It means when something happens like the pandemic and you have to close your business, that you have enough cash to get you through that pandemic. And we were very lucky. I'm the biggest failure here that's joined this webinar. I lost a business in 2008 that went bust with 45 people in it. And I swore from that day that was never going to happen again. And luckily, in our business, this business, we have followed profit first for 10 years now. And we could actually close down today. Luckily, we have never been fully closed. We've been able to operate one of the lucky ones. But we could close down, pay all of our 30 staff, and still open up in a year's time with no income coming up, merely because of profit first. Nothing we've done other than profit first, because over time we've hived away 50% of our profit every single quarter into a reserve vault, and we forget it's even there. We don't even think that it's there. And that's what every business needs to do. Every business, no matter what size you are, if you practice profit first, it'll change your life. It will change your life, I promise you. Anybody who's done profit first, it changes their lives. So hopefully that answers all of your questions. So Diana says, I've got you. Great. So I think that's it. I know we're finished a bit earlier than normal, but there's no more questions. So we will share this in both 3XM Insiders into the group, and I'll share the calculator in there too. So thank you for joining us. And don't forget that Imogene is on this weekend. I should have shared it actually. If anyone wants to join me, I am doing a masterclass on Saturday. I should post a link, will I? I'll post a link before we go, in case anyone does want to go to it. What I'm doing at it is I'm doing a 3-hour masterclass on creating a business success plan. So let me just share that link now. I should have had that prepared, shouldn't I? I'm a bit unorganized today. And I know Marnie is speaking as well. Good to see you here, Marnie. So make sure you go along and see Marnie as well. I don't know exactly what day you're on, Marnie. Tell everybody there what day you're on. Where are we there? Schedule. So let me just copy a link in for you for the Saturday one. It's 10 a.m. Eastern that I'm on. And I'll just copy and paste that link there. Then if you are mad enough and you want more of this stuff, that you're welcome to come and see me. So there you are. I've posted a link in the chat there if you are interested. So if you're not going to come see me, do go to Imogene. Like, there's photographers here from all over the world who join us. And there's a great opportunity to see great speakers within our industry and from outside of our industry who go to Imogene. And, you know, you can see all the main platform classes for $56 US dollars, you know, which is amazing. And it's open all the way till the end of January. And then if you're going to any of the master classes like mine on Saturday, they charge an extra fee for that. It's $40-something, I think, in addition to go to that. So that's it for today. Stay safe, stay healthy, everybody. Hopefully I'll see some of you at Imogene. Do come and see the 3XM stand. We have our virtual stand there, and my team will be there. And I'll be also doing a live Q&A on the stand, the virtual stand, for the hours that are the designated exhibition hours. So stay safe, stay healthy, everybody. Hopefully we'll see some of you there. And bye for now. Thank you for joining me.